I've always wanted to do a video going over some specifics, always based off of questions we may receive or emails we have received in the past as well as in the present. So I wanted to really hammer in on this point so everyone can have an understanding when it comes to the different ways you can make money within the markets. First, I'm going to address investing versus trading. Investing is a long-term plan generally. It's really about creating wealth over time. This could be 5 years from now, 10 years from now, 20 years from now. I'm sure a lot of you have seen situations where someone will make a post that if you invested, let's say, $10,000 in a stock like Apple when it was X amount of money, presently you will have a few $1,000,000 by now. Same thing with Google, Amazon. Well, that is absolutely correct because of the long-term horizon is different when you're investing. And you have to also think about your money sitting there invested in an actual, it could be a stock, it could be a mutual fund or index fund, ETFs, exchange traded funds. Common objectives, well, growth for one, diversification in terms of, let's say you're an investor, but you also have other assets, such as, let's say, real estate, for example. You get into the markets and start investing your money in order to diversify. Compounding, that's your money growing over time. You have a $10,000 investment, but every month you are adding to that investment, well, your money's going to compound, especially when a stock increases over time in value. That's a compounding effect, as well as dividend reinvestments, especially if you have a stock that pays great dividends. So some of these are just a few ways or a few strategies, especially dividend reinvestment. Some people will have just DRIP, D-R-I-P, which that's what this stands for, a specific strategy in order to enhance their long-term account. Continue reinvest those dividends because that is a sense of free money, which it is. So I just wanted to break that down quickly without really diving into too much extended details. Now, trading is different from investing. I always say you invest always. I wish I had it up here. Invest always. It requires patience. Even if you may not benefit immediately from investing, just know long term is great. Perhaps you have kids you want to send to school, higher education, where are you going to get that money from? Well, you could pull it out, your long-term accounts, etc. All right, so trading, short term, for the very short term, this is what we specialize in. We do not dive into long-term investing, the profit room per se, but we encourage our clients, our students, doesn't matter, anyone really. We encourage you to really learn about long-term investing. That's just sitting and waiting. We call it grandma or grandpa's money because that's what we're looking forward to once we reach that age. But what about right now? What about making money right now? Perhaps you don't want to work a part-time job. Perhaps you're sick of your job, your full-time job. I know once I was in the corporate world, I was sick of my job, not necessarily because it wasn't a good job, but I just didn't want to do that. I wanted to follow my passion. My passion was always trading stocks. So short term, exactly. that can last for minutes, days, to a few weeks, to a few months. And in order to achieve this, just like anything, long term as well, you need a plan. We need that plan. Same thing with short term trading. We need a plan. We need to be a student of our craft, so we need to study. You must have discipline as well as risk management to be successful at short term trading is a must. Because if you do not have discipline or structure, you will lose it all, literally. And here are the vehicles that we use for short-term trading. You can trade with stocks, options, Forex, futures, aka commodities, bonds, also cryptocurrency, right? Cryptocurrency as well. Next, we'll dive into the difference with short-term trading. You have swing trading versus day trading, and this is where we always get a lot of questions. Most of our courses that we do have, we specify because we have a lot of new beginners initially, and not many people understand the difference between two. For beginners, we generally teach swing trading or through an option trading format with a swing trading method. And here's the reason why. Well, swing trading allows you more time to really sit and think about that trade you are going to place. You have plenty of time for the trade to work out in your favor based off of your analysis. You'll be surprised sometimes if your technicals is so clutch, on point, your swing trade will actually hit your target the next day. And sometimes certain trades take a little bit longer, meaning a few days to a few weeks, depending on your initial target. But with any trading we do, we still have to have a plan, define risk management, as well as discipline. We have to be able to scan and research, perform our analysis. Also remember, swing trading, this is generally the time horizon we're working with. It could happen the next day, a few days, few weeks, sometimes months, depending on your target. And these are the markets that you can swing trade. Most people look at swing trading as just something that you can do stocks slash shares or options. That's furthest from the truth. You can swing trade any market. You could swing trade Forex, you could swing trade futures, you could swing trade crypto. All swing trading is a method. Common objective is to be able to make money without being glued to your computer. So generally, when we provide or do swing trades and how we teach people to research over the weekend. Whenever you have free time, you'll be prepared to place your order in your brokerage account by Monday. And depending on your entry point, it may or may not execute. And if it does, now you already have a plan based off of what you analyze, where that stock shouldn't go and what's your take profit. You're not sitting around babysitting at all. By the end of the week, if the stock hits your take profit, that just sums up what you did your research or the time you put in over the weekend, and you'll realize the profit generally by the end of the week. So it's great for people who have a busy schedule, people that have a busy schedule or full-time jobs. Now let's get into day trading. Day trading is extremely specific. And I feel for beginners, the swing trading method works great. Allow yourself that time to really let the money come in, but you're still doing it. You're still reading charts, etc. Day trading, you have to think quickly. You have to be able to react. Very important. And you can only react if you understand the way the market works during the day. Day trading, it takes minutes, sometimes hours. It all depends on your strategy. And this is no different than swing trading. You still have to have a plan, discipline, and have that risk management. This is a common theme among the profit room. Discipline and risk management. You still need a plan, period. You can't just jump in a stock and expect it to work wonders. It doesn't work like that. Now, day trading, time frames. Anything under a daily time frame is considered day trading. 1 hour charts, 2 hour charts, 4 hour charts, 3 hour charts, 5 minute charts, 3 minute charts, 2 minute charts, 1 minute charts, 30 minute charts, 45 minute charts. It doesn't matter. That's day trading because you're approaching the market within that specific time frame when it comes to trading stocks and the options. You also need to be able to scan and research and find the trades that are liquid enough for you to make money within that day. And there are different methods. Scalping. Now, what we do over at the Profit Room, I don't consider myself a scalper. We used to scalp way in the past, but more so now we're looking for bigger movements, $1, $1.50, maybe $2 per share in a given day. Our risk, well, generally 30, 35 cents depending. Scalping, in my eyes, is when you're buying a stock and you have thousands of shares and you just wanted to move 5 to 10 cents and you're out to trade. That is scalping. We do not scalp because it's not beneficial for those who are a part of our community to just turn over that fast. Yes, it can be done, but we want people to catch the trend. So you'll get that straight nice flush or movement higher to really realize some profits. Now you're holding through smaller time frames trends, and that's exactly what I'm talking about besides scalping. But the whole purpose is to realize your profits within that given day before the market closes. The market opens from 9:30 a.m. Eastern to 4 p.m. Eastern time, Monday through Friday, unless it's a holiday. Outside of the stock market or day trading stocks or options, you can also day trade Forex, futures, bonds, crypto. The same logic applies, but the time frames are different, meaning Forex, futures, these markets are 24 hours, so it doesn't matter. You can still scalp Forex, 5 pips, 10 pips, 15 pips, right? You can still scalp futures, 5 ticks, 10 ticks, 15 ticks, all depending on the commodity you're trading. But I just really wanted to tackle the difference between day trading and swing trading. Day trading, never forget, you are always cash at the end of the day. You're not holding anything. You're not sitting through possible, I call it like news overnight. If something were to happen that affects the market, you don't have your capital exposed to the unknown because you're cash at the end of the day. So hopefully I was able to clarify the difference between swing trading and day trading. Hopefully you understand it a lot better, especially when it comes to investing versus trading. And I'm just going to give one more visual, and the visual has to do with the actual charts, just to kind of hone in on my point. Now I have it on a daily chart. We have Tesla stock. So we're looking at Tesla straight up, right? That's all it's been doing. A swing trader would have came in and let's say they bought Tesla right here, right? And they're just holding because the trend is intact. So this is a few days to maybe a few weeks or more. But if I zoom in and go to a 1 hour chart with Tesla, now you're just seeing what happened Friday during Tesla's day. Perhaps a day trader want to come in now and, well, just look at the trend is going down. You're shorting Tesla stock. It's the same concept when you're looking at ES futures. This is a futures market. The only difference is, well, the trend is up. You're buying the futures. Here goes Forex, GBP, JPY. The difference within this one, well, the trend was moving up. You're buying this Forex pair. If I go to the daily chart, well, the swing trader would have bought maybe and held it for 2 days. Exit. Let's see about ES. Well, look at this. Looks no different from Tesla. The swing trader would have bought it and held it for a few days because the trend is still intact. So hopefully you benefited from this little brief thing. And I just want to say happy Friday. No, it's not Friday. Happy Saturday. All right, take care. Be safe.